Hello, I am Badani Arya. In this video, I'm going to talk about how to do financial forecasting. This is one of the lectures in my course, Complete Guide to Bookkeeping for Small Business Owners. The essential features of the company's future and the current operations depend on the results of the financial forecast. Because the investors' decisions determine how much a company can get credit or more, but cannot overemphasize the accuracy of the predictions. These tips, the tips which I'm going to talk about, will help you to do a financial forecast. What is the purpose of a financial forecast? There are three aspects that you can expect from learning the financial forecast. You have to estimate how many units of your products or services you can sell. Will your current budget influence your future? Knowing the financial forecast purpose helps you determine which factors and metrics you have to consider when doing it. You need to have past financial records and the historical data. One of the main elements of financial forecasting is analyzing past data. Therefore, it is essential to gather all relevant data and records. Therefore, things like revenue, losses, liabilities, investments, equity, expenses, comprehensive income, earnings per share. If you want to maintain the accuracy of the financial forecast, you cannot miss any of the relevant data and records for the above. Choose your financial period for your forecast. The financial forecast is a perception of the future of the business. So you can decide the period. It can go on from weeks to years. But most companies prefer a financial year to do the forecast. The financial forecast can change if the environment and the specific situation in the business. Therefore, the more accurate estimates you produce could be for a shorter period. Easy to do for a shorter period, that's what I meant. Choose a financial forecast method. There are two financial forecast methods. One is quantitative forecasting, uses historical information and data to identify trends, reliable patterns and trends. Qualitative forecasting can analyze experts' opinion and sentiments about the company and market. Both methods are suitable in their ways, also have their strengths and weaknesses. But the qualitative shortcoming is ideal for the new startup because they do not have the past record. Document and monitor results. You should keep the records of the results as they could not be 100% accurate, especially in the circumstances where you make internal and external developments. That helps you to monitor your results. If you keep the records, monitor your results as and when needed. When you make changes, you can look at it. Then you can easily automate the monitoring using forecasting software. So find it easy to get the updated results. It is vital to examine the financial results. If you need accuracy in the forecast, it will help you to examine the financial data regularly. Besides, when you do it continuously, that assists you to prepare for the next period quickly. Also, you will know what the company's performance. Do not miss doing the same on the date you have done it before, done it last. Innovative companies, smart companies, conduct regular financial forecasting to stay in the know and control. Do not wait till the economic forecast become outdated. Repeat the same process on time. It also prudent to keep collecting, recording, and analyzing data to improve your financial forecast accuracy. When you do the forecast, it will help you if you make different versions of it, such as aggressive, moderate, conservative. Aggressive means it is a forecast that suggests the business success exceeding your expectations. For example, you think you will have a 10% growth each month of the sales, but the forecast will be showing 20% or more in your aggressive forecast. Moderate, this forecast will reflect the reasonable predictions. For example, if you rationally predict 10% sales growth, the forecast will remember the sales growing at 10%. Conservative, this forecast will reflect the business falling short of your expectations. For example, you assume 10% sales growth, the forecast will remember sales growing at 5%. So you know the difference. When you have the different situations, will build your confidence. You will know what will happen. Be able to explain each one of your assumptions. Everything depends on your assumptions and the past records. Be very critical of the assumptions you include in your forecast. Second, guess each of your assumptions until you clearly understand why you choose them. Record every assumption you use in your financials to refer to them quickly. Explain your assumptions thoroughly to yourself and others. It is often more critical to successfully explain the thought process and logic to determine your deductions than to predict the future. Yeah, this is how you have to do your financial forecast. It's very critical for any type of business, maybe small, maybe big. If you have the financial forecast, you are safe in running your business. I hope you like this video. Thank you very much for watching this video. Thank you. Talk soon. Bye for now.